Okay, so welcome everybody to the gold scalping strategy Zoom. I was actually just thinking of making a YouTube video about it, and then I said to myself, hold on a second, who's online? You know, it's still a moving market at the moment. So I just said, might as well tell the people to join the Zoom and see, you know, what I was talking about in terms of breaking down. That's okay, man. I said I might as well show the people what it is in terms of when I'm, you know, trying to explain a strategy. And this way you get a chance to ask questions at the same time, instead of me just, you know, relaying information and you having to ask afterwards. So I thought it'd be a bit helpful to do kind of a live YouTube type of video in the sense of me giving out a strategy on YouTube. So first and foremost, what I want to go over is a lot of people ask me all the time, what are your services? I'm not going to break all the services down from top to bottom. You can easily direct message me in Discord here. My user is, where is it? Yeah, it's 4537. So if there's any other Big John or Easy Forex that messages you that isn't hashtag 4537, then it's more than likely a scammer. So be careful of that. And you can hit me up on Telegram as well at BigJohn_BK. Hopefully so there isn't no scammers that you do get there, but they are very creative, so you have to be careful. If you do want to see where all of my services are, you just go to the Easy Forex section in my Discord when you do use the link in the description below. And what you're looking for, mute your microphones. Come on, guys, you got to mute your microphones. You're going to give me all your private information. I don't want that.
Letter 500.
Oh, no, here we go. Some more. There we go. Cool. So yeah, just go over to the Easy Forex information section and you'll be able to get onto any of my services. You know, if you are using TradingView Pro and you do use it monthly, please go into here. I've got an affiliate link. Does help me out with the monthly payments, and you get some coins as well yourself, I believe so, when you do sign up for your monthly payments with this link. And then I've got the Neo Telegram alerts, which is the VIP service. I've got crash courses, which means, you know, I could do one-on-ones with you. Pricing's in there. I've got signals and I've got copy trading. So manual copy trading, I've got rid of that now because not enough people are bringing the correct amount of capital for me. That's me, how I trade, to be able to make them substantial money. So I'm just not going to be doing that. Personally, I need people with a lot more capital. So we're talking 10K, 20K, 30K. And if I'm making 1 to 2%, oh, that's Trinity alerts there, on that type of account size, then it pays for the service and you're making a growth on the account every single month. But if you're bringing like $100 or something like that, I'm not going to be flipping your account for you. That's just too much work and it's stress. I can't be able to do that. So if you want long-term consistency and you've got the right capital, you can get into that. And then I've got the MORPHEUS trend alerts as well at the same time. I don't want to loan you 10K, but if you want to give me 10K to trade, no problem. You put it on there and I can do that. But then I also have the manual prop firm copying, which is all of the trades I am taking. And it's a very human-like system, you know, because mistakes get made as well on different accounts. So therefore, it's not an EA copying all of the trades onto these prop accounts. I'm literally manually taking these trades. So it is pretty much just like you would take it yourself, but it's me. So yeah, that's all of that there, that good stuff. Let's just get into what we're here for today. Let's go back to the general here. And let's go over to gold. So my whole thing with gold, and so people can understand it, let's get rid of, oh, we'll keep this one here for now. We'll get rid of this one here, is that a lot of people are trying to scalp gold. And this is a good way how you can make money per day trading gold. But what you need to do here is, let's go through some ground rules first. So one of the ground rules is, first and foremost, when you are trading like this, you know, if you've got like $100 in your account or something like that, don't try and do it with $10. It's not really going to work for you because, you know, it's scalping. You can lose trades before you win trades. So I wouldn't suggest you do it with your $10. Try and have like at least $100. Pardon me. And the whole aim here is for you to be able to only take out, like, you're trying to get 25 pips, basically. This is the aim of it. So of course, 25 pips isn't too hard because gold is very volatile and it moves pips a lot. So if you get like 25 pips, sometimes it might be 20. You want to get that and you want to be closing the trade. Or if you are comfortable because you've won a certain amount of trades, then you can let your trade run, like I will show you in the explanation over here. And the point of this is, every day, you're just trying to make your account grow by a little amount, maybe 1%, 0.5%, and stuff like that. You don't want to be in a position where you're trying to grow your account by £1 million a day trading like this. It doesn't make sense unless you've got the account size to do it. So why I'm saying this is, if you keep your lot size relative so the same lot size. So let's say for a whole week, you only use 0.01 on the account when you take these trades. Therefore, you're going to see a growth in your account. So maybe not the next week you go to 0.2. Maybe by the second week, if you're doing what I'm going to show, then you move your accounts to 0.02. So you've got some type of money to be able to lose in order to move forward again for the week, of course, with winning and losing trades. You want to grow your account like this. Don't try and up your lot size with each trade, because you'll just end up blowing your account. This is not what you're supposed to do, you know, so just be slow with it, but be cautious with what you're doing at the same time. So getting into the strategy straight away, let's get into the source. So you want to make sure you start from obviously the beginning of the day. Asian session is probably going to be the worst session to do this with, unless there's any type of, you know, news push. But let's just break it down from here straight away. Your whole aim and what you're looking for is a swing high and a swing low to form on a 15-minute time frame. 15-minute time frame. You can do this on any time frame you want. If you go below the 15-minute, 1 minute, 5 minute, completely up to you. Do not come to me if you have to start losing 16 trades in a row before you win one trade. It is not my beef. Yeah, it's up to you. If you can't be patient enough to wait for something like this, which I'm going to show you how you can set alerts, then it's your own problem. Yeah, so what you want to do is you want to look for a swing low, swing high, whichever way. It doesn't matter. It just depends on how it comes in from how the day in the market is starting. Yeah, we can see here that this was the previous week, but of course you would have started the market from this week here. But where was your swing high and your swing low? So your swing low was over here, your swing high was here. And then all you want to do is literally just draw a box. So I had this rectangle box, I put it here, and I put it from my swing high to my swing low. So most people will call this supply demand zone. Some people will call this order blocks. But your whole aim of this is you're just waiting for the market to break out of this zone, and then you're catching a trade. Again, the reason why this is good to do this for something like gold or maybe indices is because they are volatile and they move pips quickly. So you can get in and get out of the market, quote unquote, the whole point of scalping. So what you want to do after that is you want to enter a trade and you want to put your stop loss at the body or the wick of the breakout candle. Your whole aim is not to have huge stop losses. You don't need to put it above here. Just use one candle reference. Again, you're going to be winning and losing trades like this, but it's okay. You don't have to stress too much. This is the game. And what you're going to do after that is, again, you're going to be looking to take at least one candle's breakout. But if you don't get the pips you need, maybe try and go for 2 candles or etc. Your whole aim is to get about 25 pips, which 25 pips was about here. Of course, sometimes about here, of course, sometimes you might get a bit less. You might get 15 pips. You could get 10 pips. You could get 22 pips. It's completely up to you. But, you know, averagely, you want to be getting 25 pips or more. It just helps you out in terms of growth when you are taking these scalping trades. And again, you're going with the breakout of the basically the key level. So the market's basically showing you that a key level has been violated and a breakout may occur. So you can see that this was obviously a winning trade over here. And we're just going to go for our winners and our losers right now. So we had a winning trade here. And then now what I'm going to do is once this breakout did happen, whether or not you held this trade, completely up to you. I'm not going to get fancy and start telling you, make sure you take 1 to 4s and you get down to this point and you get there. It's up to you how you take this. This is scalping. You're in and you're out. So if you want to take 15 pips from this and you're cool with that, it's up to you. But I say around about 25 pips is just a good number. Now, once we can see the market has come all the way down to this level here, again, once the breakout has occurred, you need to wait for the next swing high and swing low. Yeah. So what you want to do now is, again, we can see here the market is pushed down. There's a swing low here. Come on, guys. You got to mute these microphones, man. Come on. So you want to go to this level over here. And then now we can see that the swing high had occurred over here. Yeah. Swing low, swing high. We can see the market's obviously pulling back. You're not going to enter the trade just yet. You're just going to draw your box and keep moving it across until eventually we saw the breakout. So this is great because now we can see there was a losing trade over here right now. Yeah, we can see we would have entered on the breakout of this candle. And of course, the market pulled back up. We would have lost this trade by the time the candle went back to this level here. That's absolutely fine. So what we're going to do is every time there's a losing trade, I'm just going to put this here. First, let me show you this actually, to be fair. So on this trade here, it was 18 pips stop loss, 25 pip trade. Yeah. Let's even try and see if I can do it like this to make it better for you. Short tool, we would have got in about there because of the close of that candle. We would have lost this trade here. And all we care about here is the stop loss in pips. So you still would have been up in a certain amount of pips there, not too much, maybe 5 pips. And this is why I say keep the lot size the same, because if you try and increase your lot size, when you do get losing trades, you're going to end up losing more money than you've made. So let's just say here you made $2.50 or $12.50, more than likely $2.50. Now you would have lost maybe $1 and I don't know 7 cents basically. Yeah, cool. All right, let's move this down to or $1.70. So now let's move it to the next one. So we can see that did happen there. So now what we're going to do with this box, yeah, is move this box down to here, because our swing high is still here and our new swing low is down here. So what we're going to do is we're just going to wait and we're just going to be patient and see what happens. So we just move this across. Yeah, just keep it there. And then we're just waiting to see if we see a breakout to the top side or to the bottom side. And then obviously we can see here, there was another breakout, which again would have been a losing trade. Absolutely fine. So we're just going to clone this and just move this over here. And you would have entered here, stop loss above here. And this would have been a losing trade by this trade over here. Yeah, that's cool. So we're going to do the same thing again. We're just going to move this. But now we can see that there's a new swing high and a swing low that had been formed here. Look, swing high, swing low is back down here. Remember, this is a scalping strategy. This is why you're doing this. This is what scalping entails. It takes you to be patient, and it takes you to take your time and making sure you're just doing either markups of zones, waiting for a trigger button or something like this. So now we can see the swing low was here. The swing high was here, the swing low was down here. And of course, we're waiting for our next breakout in the market. We did not get a breakout yet until the market broke out here. So let's just move this box along. And this is what actually happens. And this is why people trade sessions more than, or session opens more than trying to get in and out at certain times. You can see how big this trade was. So this was a London session going into New York session. And obviously New York session being one of the more volatile sessions, giving you a huge trade like this. Just give me 1 second, people. Down to that. In the markets myself right now, so I just want to see what's going on. What's happening? Cool. That's perfect. All right, cool. So now what we can see here is the market broke out from this level. So remember, we had a winner here and we had 2 losers. So these 2 losers probably would have put us back negative. Now we're going for the bigger trade. This is what trading is, guys and girls, is probabilities. Too many people are trying to put all of their risk into every single trade when that's not the way you should do it. You need to trade the probabilities and have enough capital to do so. We'll explain to people that you can do something like this as well with a 5K My Forex Funds account if you haven't got a lot of money. So now we can say here, we put this here. The breakout candle was this one here, sorry. So we've got a bit of a bigger stop loss this time. We've got how many pips is this? It's about 40 pips stop loss. So we're going here realistically, even though we're negative, we only wanted 25 pips from this trade. So we could have come out here. Again, this is not great because obviously you would have lost more than you made, but it did hit our 25 pip target, which would have put us back into profit. Now, if we did hold this trade, if you wanted to get your 1-to-1, now you've got your 1-to-1 there. Again, if you did hold it longer, you would have got your trade here. Of course, all of this big breakout at this point being New York session open. But let's not go on, if, buts, and maybes, because we never knew it was going to do this fancy big move here. We don't know that. So let's just go what we would have taken, which would have been our 25 pips from this trade. Yeah, there. And if you want to make it better for yourself, even though the stop loss could have been below that candle, you could have still said, look, I do want to enter this trade because the breakout happened, but let me be sensible and realistic with myself. Yeah, let me just still give myself a 25 pip stop loss, because in the end of the day, if I'm going to make 25 pips, quote unquote, trying to do that, let me put my stop loss at 25 pips as well, basically, so that regardless, I know that I took this trade for a 1-to-1, basically. So let's just move this up a bit so you can see what I'm saying. So this would change to basically 1.0 or whatever. Of course, I'm using my mouse, so it's here and there, basically. So now you can see this trade happened here. And again, this was a huge trade for a massive breakout, which would have given you the probability of a trade. Eventually, that would have been a 4.26 trade, which is an amazing breakout on the trade. Okay, so that's that trade. So we had one, remember, we've only started from Asian session and we're just in New York session. We're going to another day. So in that whole day, basically, yep. So no, we're still in the day. We're still in the day. So from Asian to New York so far, the start, there was 4 trade setups that we could have taken. And we had basically 2 winners and 1 loser. Yeah, I would pay attention to that. 2 winners, 1 loser. Okay, so now let's hit up this. Let's keep that there for now. And now let's move this box over here. So now this box is all the way up here. Again, we've got to wait for our swing high and swing low. So we can obviously see our swing high is up here, people, and our swing low is all the way down here. Yeah. So there, and how can we tell it's our swing low? Because we saw that there was an impulse off of this level. So after this candle had formed, you would have definitely made this box form from here to here. Yeah, you would have said, okay, yep, I can see there was an impulse. And now we're just going to keep doing this till we get a breakout. Again, we got a breakout over here in the market, you see, straight over here. So we would have tried to enter this trade. And again, this would have been a losing trade. Now we're going into the end of New York session. So obviously volatility in the market is a lot slower. So right there, and boom, and we would have had another losing trade. So we can see the difference in what would have worked out here. If you was able to catch this whole move here, very profitable. If you lost here, that's fine. You lost here, that's fine. But then when you took this trade, very profitable. This is why traders do take setups like 1 to 4s and 1 to 3s, 1 to 4s, etc. Because your whole aim is not to be perfect all the time. You would have been right here for your 1 to 4 or more, wrong here with your shorter stop loss. Again, wrong here with your short stop loss, but here you would have been right. Yep. And I'm going to put these all back to 25 pips. I don't want anyone to think anything different. I'm trying to cherry pick. I don't want people to think that. Now you would have lost that trade over there. That's cool. Now what we're going to do is we've got to move from our swing high to our swing low down here. So let's move this box again. And this is all you'll be doing. I've got the one box. I'm just moving it. So here and here, this was our breakout. Here was our swing high. Here. Cool. And then we're waiting for our breakout. So we would have entered here again, which would have been another losing trade. That's fine, because this is how it goes. Can't win them all. Boom. And then now what we do is we do this. So we can see there was another losing trade. Here was our swing high. Here was our swing low. Yeah. And we're waiting for a breakout to the top side or to the bottom side. And then when we do this, the market, look at how the market is respecting these areas. If I'm making this up, please tell me. Look at this, people. Look at this, guys and girls. You can see how the market, you see how I've moved the box, but look what happened. The market is now staying within this zone here. So you can see it never broke through this zone in a 15-minute time frame. Then eventually we got our breakout here. So let's go to the sell trade. Let's just clone this, make this here. And we would have entered here with our stop loss above this candle, looking for our 25 pips. And this gave us about 20 pips here. So it gives about 19 pips basically. And we'd have got this. This was even still a 1.59 trade. So you would have taken that trade there. Yeah. And you would have been in profit from that one. And now let's move it to our next swing high, to our swing low. So we got our swing high here. Our swing low at the moment would have been down here when we saw these green candles buying back up. And now we're just waiting for our breakout again. We move it over here. And then what do we have here, guys and girls? Clone this. And we do the same thing again. So you had this here, stop loss above this candle. We can see the wick there. Boom. This time we got our 25 pips. There we go. So we can see what's starting to happen. And pay attention to the time in the market for those that are not aware of the UK time. All of this was happening coming towards the end of New York session. So going in from New York session to Sydney session, volatility in the market starts to decrease. This is what happens. So when the market starts to decrease, yeah, of course, we're going to start seeing more and more losing trades. This is what happened here. This was just before London breakout, and then we see the trade. So London session started to form from here. This is why you get the big push up basically in the market. And now we started to see this, and then the same thing started to happen here. But then when we start going back in to London session now again, the open of London session, we can start seeing more volatility in the market. So that was a winning trade there. So now let's do our next swing high to swing low. And that would be from here back down to here. And we're just looking to see, and you can see from here to here, the market again failed to break this area. So we wouldn't have gotten a buy, we'd have looked for our sell. And then we got in here, clone, and then we would have been in here. And you could either put your stop loss all the way up here, or you could have put it 25 pips here. Yeah. So let's just do that. And there we go. Where's our 25? Our 25 pips was here in the market. But again, you see the same pattern happening. This time, look at the breakout. So obviously it was a ridiculous breakout. You could have got this trade all the way down to here, but let's just say you got it down to this level here. Yeah, there was a winning trade there. And boom, when we go down to here, let's move on to the next one. Where was our swing high? So this was our swing high here, right there. So our swing low here. And what do we see? The same thing happening. Look, come on, guys. Come on, look at it. Look at it, man. Look at it. Swing high, swing low, market respecting, doesn't break. And then what do we see over here? Eventually, let's make this box bigger. Boom, we got a breakout here. Let's clone this again. Here you go. Stop loss just above that candle, 25 pips, if you want to call it that, would have been here. We would have been good on that trade there. And if not, you still could have made it go all the way down to this level down here. Yeah. Now let's go here. From our next swing high to our next swing low. So I'm gonna do it. Boom, 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 boom. Here, swing high. So here. Here's your swing high. Because you can see the market pulled back right there, sold down there, boom. Here's your swing high, here's your swing low down here. And we didn't see the breakout of this area. Even though some people would have tried to trade all of that, we didn't see the breakout. Then we saw our breakout here, clone. And literally someone got in this trade as well. I saw it in the MORPHEUS funds area, probably using something very similar to this themselves as well. I saw it in the trade area. And we can see here, stop loss above that level there again. So pay attention to the probabilities of trading, guys and girls. Yeah, pay attention to that. As when we saw our losing trades a lot of time before, eventually we got into a period where the market started to give us more winners than losers. This is why you got to keep your lot size the same, because there is going to be a period where you will get losers in a row. But when you get winners in a row, therefore, you're going to be able to come back because you're not leveraging, you're not risking more. So that you should be winning the a certain amount of money and in terms of risk level. So 0.01, let's just say now, and you'll be losing a 0.01 worth of trades, of course, in X amount of pips. So we can see the same thing happened here. Now we go back down here. And then let's do it again. So let's just see. So that was our swing high here. And our swing low was down here. Yeah. And then we're waiting for the market to break out this level. Where is it? So this one here probably could have got you caught out. You might have entered here. So this would have been a losing trade. So let's even do that. Clone. So you would have entered here. Again, I'm not trying to be anything funny. So we would have had this, pardon me, here. And that would have been a losing trade there, more than likely. And then now you're still waiting. So when this has happened, we've seen this. Now we're going for our next swing high and swing low. So our next swing high and swing low. Swing highs here. Swing lows here because we saw this rejection off of this level. So I was looking for the highest point there. So we see the highest point is there. We can see the market rejected this area. You've seen me slowly go through, and everyone I've picked out, you can see what's happened. We've seen a rejection off of this area. Boom. And then now the next thing, we're waiting for a breakout of this area. So this one here probably would have been a losing trade. So clone. Let's just see. You would have entered on the breakout of this candle. Would have got in here. And unfortunately, yes, this one would have been a breakout, right? So it would have been a loss over here. But then again, we go to our next swing high, swing low, which is here. It's the same thing pretty much. So you might as well keep that there. And then this was definitely a breakout because there's a weird little gap in the market. I don't know where the candle stopped. What time was this? I don't know why it gapped like that. But of course, when you entered this one here, clone, say it came here, stop loss there. Oops. Let's bring this in. And this one was a 20 pip trade so far. Let's say when it pulled down to here. So it's about a 22 pip trade. Obviously, it's ongoing. And guys and girls, that is literally how you can scalp gold on a day-to-day basis. So you see, I've gone through 3 days basically there. What are we in now? We're in Thursday. So I've gone through all the days of the week and taken these trades. So let's just see what we had here. So we had one winner, one loser. So we had 2 losers, 1 winner. We had 2 winners, 2 losers. We had 4 winners, 2. We had 4 losers, 2 winners. We had 3 winners, 4 losers, 4 winners, 4 winners, 4 losers, 5 winners, 4 losers, 6 winners, 4 losers, 7 winners, 4 losers, and then we had 7 winners, 4 losers, 7 winners, 5 losers, 7 winners, 6 losers, and then we had 8 winners, 6 losers. There you go. So you would have had 8 winners and 6 losers based on that strategy. So anybody got any questions based on what I just said there, or what I've just taught on that? If they've got anything they want me to explain in more detail or anything like that. How to identify swing highs and swing lows in the live market. When the candles are moving, you please show a couple of examples when the chart is in replay, if possible, or time permits, as when the swing high ends, how to freeze upon you should observe. All right, cool. Let's go here. Let's go here. Go to where is it? So let's just see a break. So let's go here. Let's go here. Let's go here. Cool. So I've put on the replay mode there. I've even gone to a random date. We can see it's at the start of the week. So what I can see here is here's a swing high and here's a swing low. From here to here. We can see it previously. We can already see the swing high, swing low. Let's wait for the next ones to come up. Let's just try and take this as it goes, see what happens. Let's make this a bit wider till we get a break, see what happens. There we go. Let's see how this candle goes. So we would have entered possibly in here. Let's just see what happens. Yeah. Long tool, we entered here, stop loss below here, and then we would have taken this trade here with the possibility of it going to clear this impulse candle over here. See, this is an impulse candle. Why is this an impulse candle, guys and girls? There's no wick left at the top of this candle, meaning that it was a straight decision to go and sell. When they do these candles, a lot of the time they go and clear it because they've done this impulse to go and grab liquidity very fast. So at some point they have to go back and clear this candle. It doesn't have to be straight away like you might be seeing here. It could be 2 days later, 3 days later, a week later. Obviously it's time frame dependent as well when you see these candles. But eventually they do go and clear this just like they clear liquidity. So let's just keep seeing. So this was already a winning trade there. Let's just bring this in. And then now that this is a winning trade, where's our swing high and swing low? So we can see our swing low is here. And then we just got to wait for our swing high to form. Yeah. So we can see that there was a rejection here in the market right now. We need to see a push down though in the market. We haven't seen a push down yet. So you need to see a clear push down in the market just to see. So we haven't seen no push down yet. There was being respected. There you go. Let's see if this when this candle closes. Okay, cool. So this is what I would call my swing high for now. And here's my swing low down here. Yeah. Let's see what we see. Let's see. Swing high, swing low. So we want to see the market either break this level up here or the level down here, which is a huge level. Let's see. Look, they cleared most of the liquidity on that candle, just like I said. Let's see what we see. Rejection. Okay, it broke this one. We would have looked for an entry here in the market. So let's just go up. Cool. Long position. Yeah. There we go. Long position there. No, sorry, stop loss down here. So entry, no, entry here, stop loss here. There we go. And let's go for, let's see what our 25 pips is. See, let's see if they pagan us. They might reject it off of this level. Let's see. Yep, they rejected it. Oh, it's close, touching cloth. This, okay, our stop loss would have been a bit lower. Let's give it a bit lower. It would have been about there, people. Let's see, it would have even still been a bit lower, just a little bit lower. Right there, yeah. All right, let's see what they do. It's probably hit stop loss anyway. Let's see. They're really making you hold this trade, boy. Ooh, ooh. Are they going to give it to us? Nope, they hit stop loss. So that trade would have hit stop loss. That would have been a very long trade to hold, but it eventually hit stop loss. That's fine. So we just put that trade there. And now we can see where's our swing low. So I can see my swing lows here, my swing highs up here. So you see how you can see it in a moving market. You just got to play with it. So my swing lows here, my swing high is up here now. Now we've moved this zone. Okay, no, sorry, my swing high is here. You can see it there. And now we just want to go across, wait for the next breakout, see what we see. There we go. Here's a breakout. Let's see if this would be true to us. Looks like this will be another loser. Right, let's see. Let's see. This is the whole aim of it. You got to take what you see. This one already hit 25 pips straight away. Your stop loss would have even been tight in this pair, because look at that. This one broke out above it. Your stop loss could have been very tight. It would have literally been below there. That's a ridiculous trade. So let's just be realistic a bit more. You would have given yourself there, and that one already hit your TP level there, 25 pips. Let's see what happens. So you had a winner, loser, winner. Okay, looks like it's pushing back in. So for me, let's move this in. Let's move this in, and here we go. Swing low here. Swing high here. Let's do it again. Okay. See this one probably being a loser as well. It seems like it's a consolidated market, but let's go. It is a loser straight away. I can already see because it went in. So you would have got in on this candle closure here. Stop loss would have been below here. Let's see. Let's see. Could be wrong. Yep, this was a lose. Not yet. Not yet. Yep, now it's a loser. So there you go. So where's that? So swing high, swing low. And here we go. So where's the swing lows here? Swing highs here. So you're literally just following the market as it's going towards structure. There we go. Not yet. There we go. There's the next one. Give me 1 second, people. Seeing it. Trying to see my trades at the moment. Okay. Look like his favorite. Looks like they'll stop me out in the trade I'm in. Okay, so let's go here. Let's go to the clone, and you would have got in here. Again, where's your stop loss? Would have just been below this wick here. Let's see what they do. Yep, this one hit your take profit. There, you can see it hit your take profit. Boom. Yep. So already, so we're not wasting too much time and other people got questions to ask. Can you see how this would work in a live market? I've literally answered your question with a live replay and shown you how you would do it, how I would do it. No problem at all. So again, that's even good that you asked that question, because I know a lot of people would want to see some type of live version of this type of trading or something like that. But again, you can see straight away how you'd be able to trade this and what it's like. It's not going to be something that's going to be very easy for you to do in terms of, you know, someone if they're probably a beginner at trading, but once you understand what you're seeing in the market, and yeah, you've got like this kind of idea of how market structure forms. Of course, it's easier for me to spot because I'm used to seeing swing highs and swing lows. You've got to take your time and practice, but hopefully the replay mode, what I just did here with how the market's forming, will help certain traders in the market. And that's how you do that one. Another thing you can do as well, I can even show you here, what you can do so you're not spending 15 minutes each time paying attention to what's going on the chart. You could literally just do this, and then you could just, so you do 2 lines. Clone. Give me a second. And what you can do is you can set, okay, you can't do it on this line. Okay, so get rid of this line. You have to put the horizontal line. So let's do this. Horizontal line. So Alt and H, ALT and H you can press. And then you just got to right click on this. Why is it not going to let me add the alert? What's going on here? Oh, it's because I'm in replay mode. That's why. Okay, go to, yes, I have to exit the replay mode. Okay, so let's just go back over to there. Might take a bit of time. I don't even have to show you like that, to be fair. You can just basically click on these lines. Of course, that was on the box, and then you can just go to add alert. And then when you go to add alert, just go to once per bar close, crossing that line, and then you can set up anything you want, notify an app. You can have it show up, pop up on your screen, or you can have an email alert, and then just go to create basically. And then when you go to create here, give me 1 second, people. I don't think I'll be able to change it in time. But one trade, I'm just in. We're going for the raw stock hunt right now. Yeah, just have to let that one be. See if they do or they don't. Yeah, put it grab. There you go. So this is what happens when you live trade as well. So yeah, you can see straight away that you can put your alerts there. And when you put your alert there, again, when you get an alert notification, you know, if the market getting closer towards that level, or does actually touch that level, sorry, and then the 15-minute candle closes there, wick or body, you'll get an alert notification. So that will help you out there. Just glancing through the past of the chart. The past chart, one thing I observed whenever it made 3 consecutive cents. Of course, yeah, that's completely up to the trader if they want to go and do that. Some people have said things like that, you know, when you do see a swing high, swing low, you're looking for 3 consecutive candles in a row. If they do something like that, then there's a probability that they can basically give you the trade. They will give you a better trending trade, basically. That's what I have heard before as well. Just give me 1 second, people. Don't think I'll be able to do it in time. Maybe there was the fear of this because I'm in a live trade. That's why I'm trying to just adjust it while I'm talking to you. But yeah, if anyone's got any other questions, please let me know while we're here, because I have gone through some explanations. So if you've got any questions, let me know. Cool, I'll answer your question in a second. Just trying to modify something quickly. Be fast when you're modifying. I'm modifying loads of accounts. Cool. Yeah, this would work for currency pairs as well. This would literally work for a currency pair. So you'd have no problem with this working for a currency pair. The only thing I could suggest is that, of course, you're expecting like maybe a 10, 20 pip move. You've got to remember currency pairs have smaller pip ranges that they move. So to get a 25 pip move from a currency pair is going to be harder sometimes. That's what it is. So you just have to bear that in mind as well at the same time. That's what it is when it comes to currency pairs in this type of trading. Cool. And then does this work on a lower time frame? You can try it on a 1 minute or 5 minute time frame, but that's completely up to you and your account. If you want to stay there and do that on that time frame, it's up to you. But for me to do that on a 1 minute time frame would have been a lot of showing. So you remember, the market, regardless of what time frame you're on, is always going to be the same type of structure. Structure doesn't change in a market. When you're on a time frame, it's always going to be lower highs, higher lows, higher highs, higher lows. So yes, it would work, but it just gives you a bit of a better base on the 15-minute time frame. Obviously, structure being a bit more tighter. That's the whole idea of it, basically. Okay. That's all I got for now. All right, no problem. So anybody else got any other questions, anything like that, people? Anything of that nature? No problem at all. Like I said, I was going to make a YouTube video, but I just said it makes more sense if I just give this out as a Zoom, so then people will be able to pay attention to it and see, you know, be able to ask questions as well at the same time. Anybody else got any other questions? Yeah, no problem, people. You can already see, look what it's doing on gold down here as we speak. This is the market right now. See this breakout from this zone. So your swing high, swing low would be here and this one. You'd had a swing high here, and then you're waiting for your swing low would have been here, basically, and then you're waiting to see if it breaks out this zone, literally, see if it continues. Yeah, no problem at all, people. I hope it helps everybody. I hope some people can make some pips from it. Hope they can make some money, cash money, baby. And with all that being said, guys and girls, you have a lovely day. And yeah, let's happy trading, man. Let's try and catch these pips. Wow, look at what gold's doing now. that US news. Yep, massive breakout from that era. Yeah, and that's why I said don't trade it till it gets to 1680, because it's got a liquidity void there. Yeah, so basically for Morpheus, this is a trend trading idea of when you get the Trinity alerts that I do explain quite a lot. And what it is aimed at doing is instead of all of the Trinity alerts that come through, you get selective Trinity alerts that I'm giving you here that you need to pay attention to. So on that day in one group on Telegram, you're only going to get alerts for AD, USD or NZD CAD. Of course, you're still going to get buy and sell alerts on this pair, but you want to be looking for the sell alerts like we had yesterday and then price sold. And then you want to be looking for the buy alert on NZD CAD that never came through. There was never a buy alert. There was only the sell alert. And that sell alert actually happened to drop about 80 pips. So each time there is a flurry of trades, it might be every 2 days. It could be every day. It just depends on what the market gives. There is no set amount. So try not to get too fixated with that. It's whatever the market does provide with the setup. Therefore, we'll be looking for those, those trades basically. So, and we'll try and enter the market based on that when we do get the Trinity alert that pops up in Telegram. So you're already going to know at midnight, when the market opens, what pairs you want to draw your support and resistance levels on and all this type of stuff. So you're in a better position in order for you to, sorry, let me just do this. In order for you to be able to, trade whatever pair you might be interested in, basically. So if this is AUD USD and NZD CAD, you'll be able to do all your markups on your chart. And then you'd be able to say, okay, I'm just waiting for my Trinity alert. And that's what happened with AUD USD. Yeah. Where is it? Where is it? USD. AUD USD. I'm trying to see where it is. Where is AUD? Okay, let me do this. Let me show you. There you go. So you can see it's even trying to continue to go back down. So this is the trade basically here. So we had an alert on Monday for AUD USD sell. What happened, I noticed on Mondays, they did a lot of fake outs. This was basically the fake out impulse, like you're seeing on price action now where they're doing a massive impulse. They did go to break and retest of this area here. This was their area of interest where there was a previous swing low. The market came back up to here. On Tuesday, you had an alert here. Now, this wasn't a set of trades given out on Tuesday, but these were trades that you could have still looked into if you had your zone marked up. Again, there's supposed to be pairs that are in a heavy trend. It didn't break out this zone. So this is how I would have just looked at it and drawn my markup. I didn't see a break into this zone or a break out of this zone. So I'm still looking for a possible trade setup. And then when the next Trinity alert came, which was here, you'd have been able to catch this sell all the way down to here. If not, you would have been able to catch this one right over here. If you did lose this one, didn't trade this one, it did come through on this day here, which was Wednesday, and you would have been able to get the sell from here, which is currently a 4.5 ratio trade with a 20 pip stop loss that was given out. And that's how it kind of works, people. It's just literally that simple. So it's very easy how it's the breakdown of it. So you just got to literally follow this sheet when it's given out to you every day. You can wait for the Trinity alert, or you can take trades based on how you draw price action. If you see price going to a key level, you already know you're looking for a possible sell because you see the market's already started to push down, even on a higher time frame. If you look at it from, let's say, even a daily, let's take off this indicator here. So don't go too much. You can see the market's obviously in a downtrend. So this is why it's telling you it's a heavy downtrend. You've got re-entry of a downtrend. Take the sell. That's what it is. So I hope that helps you guys and girls for Morpheus. And that's 40 GBP a month for that service. So with that, you do get Trinity. All the alerts on Trinity if you want to as well. It's up to you, or you can get just that set group that gives you the alerts for whatever the Excel sheet does say. And I do tell people it's probably better for you to just get into Neo, because if you get into Neo, then you get all of the trades I take, plus you get these trades as well. And you get all of the Trinity alerts. So you basically get a package of 3, which is 60 GBP a month. If you get that, you get taught by me as well. You get these type of Zoom calls. I'm doing Zoom calls 4 times a month, which is every Sunday. So I'll give you analysis breakdown on every pair I'm waiting on in the market. And I'll tell you why I'm trying to take these pairs and what I'm expecting, basically. So yeah, any other questions, people? No other questions or anything? Yeah, when it comes to Trinity alerts, I did explain to people a good few times is that you're better off making sure you get all your key levels. What people tend to do when they get things, I know you do scalp a lot, but the market always does work best when it gets to strong key levels. So what I do tell people to do is draw your Fibonacci from your swing high to your swing low. And then you can see all the key levels previously in the market. So we can even see the trade. Look at the trade we got on AUD/USD here. We can see in the market, if we pay attention to this area here, there was a lot on a daily time frame. There was a lot of rejections in this area, whether it was rejections for the buy or rejections previously for the sell. You can see all these wick rejections. So when we did get this alert here, it's telling you that this is a possible continuation of a sell zone. This is something that looks good for you. So if you're looking for, let's say, a buy on AUD/USD, you'd be looking down this area here for better buys, because we can see all the rejections. So it'd be between this area here or this area here. So I would say even anything between this area and this area, but it's better for you. I would say always look for the better area. So down here would be the best area between this area here. So if you get Trinity alerts for buys, 15-minute, 1 hour ones, especially in a level like this, then yeah, that would be a higher probability Trinity alert to be able to take, basically, for the continuation of the buy or the sell. And that's the best way to take it. But of course, what people would like to do when they have something like Trinity is they want to trade, you know, every day with it. And that's what I try and advise people not to do. Sorry, give me 1 second, dude. I'm trying to go back in and trade. Just trying to see if I take a trade. Any other questions, people? That's what happens when you got to live trade the markets at the same time. Cool. No problem at all. Just have to bear with me if I'm staying quiet. Obviously, it's the end of the Zoom, so I'm just making sure. I knew there was a massive news event, so I just had to make sure I'm monitoring my trades. Shows that I'm a real trader as well. So that's why. So if you've got any questions, you can put them there, and then I'll end the Zoom when I finish monitoring my trades, doing what I'm doing. Just have to check. Cool. No problem then. No one else has got any questions. I'll leave it there, people. And thank you very much for your time. I hope you all had a good session with me, and I'll catch you on the other side.